Fantastic. Okay, well, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. I'm delighted to be joined by Mr. Yusuf Al-Shamari, CEO and Head of Oil Research at Sea Markets and Senior Research Fellow at Imperial College London, and Peter McGuire, CEO of XM Australia. Gentlemen, thank you so much for joining us. We're hoping Daniel Rahmat from Iran would be joining us, but the telephone lines seem to be hampered a little bit, but maybe he'll have some luck and join us within the half an hour. But thanks so much for joining us. Lots to talk about, of course, in these markets as we continue to see January, first month of the year, take shape. Peter, let me start with you from a sort of general overall markets point of view, not just crude and oil, but across the board. This sort of New Year exuberance, everything as usual? Should have that been expected, or are there fundamentals on which to base this on?
Well, good morning, Dyala, and welcome, and good morning, Yusuf. Greetings from Sydney. Well, I tell you what, if you're going to look at, I think there's so many different markets to look at over the last, well, today's the 20th. So in this three-week window, we've seen a dramatic move to the upside, or a very solid move to the upside for US equities. And it's really created, I think, a lot of momentum, certainly with the China story. CSI 300 bid up very strongly, up the best part of 10%. And also Asian equities have had a very strong rally over this 20-day period, or 18-day, 19-day period, because the steam's come out of the US market a little bit overnight, and the previous session. It'll be interesting to see what happens tonight. NASDAQ was down 1.17. You had the Dow down 0.81 and the S&P 500 off 0.83. So there's a quick snapshot as far as equities. There's a lot of fear, I think, still in the market with the inflation story, interest rate strategies from central banks and what's going forward. 10-year was crushed the other night. It lost 16 from about 3.73 to 3.53. I think it ended up at something like that. It was very heavily bid down. Then if you're looking at the euro and the currency markets, they've been on fire. Absolutely mayhem when you're looking at something like the yen and the Kuroda's vision, what transpired the other day. There was no action. The yen has been an incredible trade in this last 12-month window, where 20th of January last year to the 20th of January today, we've seen a 114 yen go to 150 and back to 128. So you talk about volatility, you cannot believe it. If you traded any market at all last year, Mrs. Watanabe, over that 12-month window, yen dollar, mind-blowing. So you've also seen the pound at 1.23, only going back to September, the day that Liz Truss crashed it at 1.03. So you're up 20 pence. You've got a euro sitting at 108.33. You've got crude oil absolutely on fire in the last probably 11 or 12 trading sessions, up at 86.5 for Brent. You've smashed through 80 with WTI. Everyone's saying is $90 the new handle for January. Copper's been bid up. Gold 19.30 an ounce, very solid. US dollar index crushed 102.15. You've got Bitcoin at 21,000 US, and all the markets, copper at 9,300, and you've got iron ore, the best part up about 34% since October. Silver's up 35% since October, and that really is a quick snapshot as far as global markets. And I think that the mayhem will continue, and we are very concerned as far as where do we see equities in the short to medium term, certainly first quarter and second quarter 23.
Well, thanks, Pete. That's a great summary of snapshot instead of across all commodities and markets, and also obviously looking very positive. Peter, let's talk about demand and Russia and production there. Obviously, we've seen that what's happened with crude. That's continued to flow by all intents and purposes.
Yes.
Question marks over whether that will continue now. Give us your viewpoint on where the market's seeing forecasting on crude flows from Russia from a practical point of view, and then of course the whole product story and the outlook for product prices because of sanctions coming on also on Russian products.
Well, it's certainly going to have an impact as far as the sanctions, and we're mindful of that. And, I think that's just got to play out. One needs to be I think, mindful is payment of crude and the sensitivity towards petrodollar and the framework that could be developing as far as payment in alternative currencies and how that could impact global, and of course the likes being paid in gold or in other payment systems, Bitcoin or crypto or who knows whatever else. Certainly yuan was mentioned. Yeah. And the BRIC nations developing that strong strategic alliance from a population base. They certainly control the best part of 50 or 60% of population. From a demand picture, it's probably not anywhere near that, but it'll certainly edge up over years to come. So there's that needs to be considered. As far as the Russia situation, the circumstances in the Ukraine certainly don't seem to be easing. If anything, I noticed that they're asking Israel for weapons. They're asking, continue to ask Biden for money. Kerry's out there saying we need money. Everything seems to be very much along the mindset that they're in for the long haul, whatever that long haul is. Putin tells us that he's gone.
Peter, and how is that now? And I think with everyone feeling this is a long haul, at least for another year or two war. You know, how is that impacting energy price forecast? Is it all priced in? Is that aspect priced in? Are people assuming that disruption will continue?
Well, I think the disruption, Dyala, is certainly that's baked in. So that continuance, the premium for any form of war premium, maybe there's a couple of bucks in there, but that hasn't been put to bed either. I mean, the realization is that it's been strongly bid up this since the start of the year. And with the news of China coming on board, this Sunday, we all know, was the start of their Lunar New Year. So I think that'll take a back seat for 2 weeks. But the second half of this quarter, I think it's going to be game on as far as from a demand side. And if it gets above that 90, and as Yusuf mentioned, the situation I think is more important is the inflation story. And in the inflation story isn't managed, then that's going to create, I think, great mayhem for central bankers. And how aggressive is Fed Chair Powell, and where is the rate as far as to satisfy or rein in inflation? So all of these factors are going to create, I think, much turbulence for this market over the first 2 quarters. And it's too hard to speculate where we are on July 1. It's hard enough to say where we are on April Fool's Day. So we could be at $100 a barrel. And if that's the case, then that's going to create much angst, and it's going to be a good sign for Russia and a good sign for any producer.
And I mean, the people are saying that really the question this year is the floor for prices. Where's that going to be rather than the ceiling? People are saying $100 will be touched again, but then the trend, the majority of the opinion we get is it will trend lower, despite the fact that China is coming back. Okay, there's a question just before I finish my own one on US and German defense ministers meet today to consider supplying tanks and heavier weapons. Peter, you were just talking about the countries supplying Ukraine and supporting Ukraine in this war. What impact, okay, there you go, would that escalation have? Bullish, bearish, no impact? Has it been baked in or not? So let's see how our audience responds there in a few minutes. But as you said, it could be another buck or two. But in terms of the sort of outlook for that, and the outlook for sort of, people are saying, no, we're going to see oil back at $60 and perhaps below this year because there is supply around if it's needed, despite how strongly China comes back, and despite the fact that the war is going on. What is this confidence by certain market watchers that crude does have a ceiling at the end of the day this year? Would you agree with that?
Well, I think you've got to also look at where we are as far as US dollar index and whether we're at 98. We're currently at 102, and it's only I think 3 or 4 months ago, and we were at 114. So let's not kid ourselves. The dramatic move to the downside, the US dollar index has been incredible over that window of time. So let's see where we are as far as dollar. If Fed Chair Powell needs to raise rates, let's let's go out there and say, no, they haven't got inflation under control. It's back up again by March. Crude prices are at $95 a barrel, and Powell's got to rein in, and he's going to do successive rate rises, 75 basis points for the next 3 months to try and rein it in. Then what happens to US dollar index? You would think that that would spike. You would think that that would have a great impact as far as earnings for corporations and the impact that's going to be to US equities and global equities. So that doesn't sound a good sign. And so that's the dislocation that I see. And when you say, could we see $60? Well, yeah, you could, but you could quite easily see 120 as well, because we're nearly at 90 and we're in that halfway stage. And it seems to be on a more upward momentum at the moment than a softness.
That certainly seems to be the case. Peter, back to you, just to talk a bit about Europe, but from a gas angle, in terms of its pull on gas and, of course, how that impacts Asian gas demand. Last year, we saw Europe pulling in LNG and taking away, I suppose, LNG from Asia because it could compete better for those prices. Outlook for gas prices this year, again, I know it's demand dependent, but this whole tug of war between Asia and Europe putting on what might be limited gas supplies, obviously, looking at the Russia picture as well.
Well, very true. And the other side, of course, is how severe the winter's going to be. I'm here in summer in Sydney having barbecues, but it is 19 degrees today. It's at 4 p.m. So the weather seems to be a little bit chaotic in Australia at the moment. So I'm not sure how cold it is in somewhere like Switzerland or Holland. So there's that impact, and that can last an extra month. So you can have extremely cold weather still in end of March, end of April in Europe, and the demand side there. As far as price is concerned, I'm expecting continued volatility for gas, because I think the whole energy complex is experiencing incredible volatility. That hasn't gone away. It hasn't, we didn't have that situation since Christmas. There's been no action. It's been absolutely game on. So where we go as far as Asian demand, that will again be weather dependent. And the gas situation, I'm conscious as far as Russia's concerns and how that plays. And there's, again, from the geopolitical angle with Ukraine and so on. So I think that we've got our hands full working through this process. And where we are by March will greatly tell us from not only a geopolitical standpoint running into energy, but the other sides of it, of course, would be demand and where China's playing at that present time.
You mentioned, Peter, at the beginning about the whole currency, not just the exchange rates of what's happened with currencies, but payment for energy and commodities going forward, new basket of currencies, Bitcoin, yuan, etc. What's your timeline on that, in the sense, yes, one day, but I mean, how soon is that one day we could really see those options being taken up?
I think that there's a very strong strategic alliance in the BRICS, and you've only got to look at the situation that hasn't been put to bed as far as Lula and Bolsonaro. So the Brazil situation, you've got to be conscious where China's playing, and certainly with India, and then South Africa and Russia, of course, and their strong relationship, or they're more than a strong relationship. I think they're nearly a partner in a lot of ways in OPEC with Saudis and Middle East oil. So all of those factors, and the Biden administration certainly hasn't done any favors with OPEC, and certainly not compared to the Trump administration and his relationship with the Saudis. So yes, all of these factors I think are going to create much concern for currency wars this year, and that no one knows when that day will materialize, but it will one day materialize. And I'm sure that central bankers and certainly the states are very concerned about the petrodollar situation for payment.
Peter, I'll give you the last word, just in reference to the survey question we did yesterday. which was when are we going to see China back? You know, Yusuf earlier was saying second half of the year looks like when everything will really come together from a sort of energy demand point of view. Are you optimistic that this focus on economic growth can work, given China still has some challenges, obviously, with its sort of remnant problems, property market, etc.?
Well, absolutely. And I mean, I was going to make that point, and that was probably the catalyst that got everything moving. The other side is their policies with COVID, and it's as far as the rhetoric coming out and the interpretation of it, it's showtime. It's game on. Don't forget, you've got rising unemployment across that young sector. I think it was running at over 20%. I heard the number in the last matter of 24 or 48 hours, but I think the youth unemployment is sky high, and that will no doubt impacting from a social issue. And we all understand with high youth unemployment creates much turbulence. They needed to get the country back open. They had to do that, and they've been mindful of the COVID situation, but also mindful of political turbulence internally. And where they roll forward from here, you've only got to see the restocking of inventories. You've only got to see what's happened as far as base metals that have been bid up strongly in the last matter of a week and a half. So that, and in conjunction with gold, central bank buying at 1930 an ounce, silver very, very strong, and iron ore and copper. So all the base metals have had a great run. So I don't necessarily think that it's going to wait till the third quarter to really show significance. I think that significance has already started, and they're restocking, and they're really playing a very, very solid move in all forms of consumption. And yeah, it's showtime.
Okay, fantastic. Well, thank you so much, Peter McGuire and Yusuf Al-Shamari, for joining us this morning. I suppose China is still the one to watch going forward. Thanks so much, everyone, and have a good weekend. We'll see you next week.
Thank you, Diala.
Thank you.
Thank you so much.
Thank you. Nice to meet you all.
Lovely to meet you. Bye.
Bye-bye.